Happy Monday, traders. Welcome back. I hope you're all well. So in this video, I'm going to give you guys an update on my perspective on GBPUSD going into a new trading week. So just before we begin, as you can see here, I am in a nice long position as we speak. It's just actually hit my second target. So we're going to get into that in a moment. I'll explain all the reasons why I decided to take this setup on the London Open this morning, which ended up playing out perfectly. So as always, before we get into this setup, let's explain all my reasons for taking it. I'm just going to go to a clean chart because I don't want to get rid of my drawings here, and we will give you a fresh analysis. So starting here from a monthly perspective on GBP USD, what we can identify first and foremost, the market is clearly in a downward trend, making a series of consecutive lower highs and lower lows. If we have a look at the most recent bearish impulsive move, which created a new low below this low right here, we have a bearish impulse followed by a retracement. If you want to measure retracement, take your Fibonacci from the high to the low of the impulsive move. And what we can identify, since making the bearish impulsive move to the downside and breaking below this low right here, the market has came back up, spiked into the 0.618, filled this area of imbalance that we had from a monthly perspective from this wick low to this wick high. Okay, so we've got the impulse, we've got the correction, and we do expect to see continuations to the downside. So this gives me a bearish bias from a monthly perspective. Now, if we have a look at the previous monthly candle, what we can identify, okay, this is last month's candle. We've closed bearish with a potential wick to fill. Now, this current monthly candle has opened bullish, and we've taken out the high of the previous month exactly here. We've taken out the high of the previous month, and now we are approaching this level of supply. This is a breaker block. Okay, we have a swing high here, swing low, then a manipulation to the upside. Now, this was the last down candle before the manipulation to the upside. So therefore, this area is now an area of resistance, and this is the area that the market is about to test. So now we drop down to the weekly time frame with the bearish bias in mind. What we can identify from a weekly perspective is here, since filling in this imbalance, hitting the 0.618 and spiking into the psychological level 1.300, the market has made a weekly bearish market structure shift. Okay, we have a swing high here that got swept. Then this was the last higher low to create the sweep of the swing high, and we've shifted structure. We've broke below it. So we have a weekly bearish market structure shift. However, one thing I want to point your attention to is this level of demand right here. Okay. Now, stay with me. Okay. If you go back to the monthly time frame, we have this accumulation of price here. Now, everything begins with accumulation. You can see here that we've taken out the range lows with this move to the downside. The market spiked into parity, 1-to-1 with the dollar, and we've saw an aggressive rejection from that zone. Although we are bearish, if we can now go to the weekly time frame, since we swept this low right here, okay, since we swept this low right here, the market has broken back above this weekly high, okay? Where is the demand zone which broke back above this weekly high? It's exactly here. Has this been mitigated, this order block? No, it has not. What we also have, if we go to the daily time frame, is we have relative equal lows exactly here, which is a level of liquidity. So, just before we move any further, my overall swing term perspective is I'm going to be monitoring for shorts in a moment, as I'll explain. Then if price follows my projection comes into this level of demand, this is where we're going to be monitoring for a potential long, because we can see this accumulation, potential manipulation, and potential distribution. You can see that the market has taken out the liquidity below the lows. Now there is an area of liquidity above the highs. So this is where I want to potentially reposition myself for long-term swing buy positions. However, as you can see, the market is very far away from that current price. So potentially, let's see what we have on the cards from an intraday perspective. What we can see from a weekly perspective is we've had this weekly bullish engulfing candle, taken out this range highs, taken out the high of the previous week that we have here. Now, where is the liquidity going to be? The liquidity is going to be below the low of the previous week. We've taken out previous week high. We have previous week low exactly here, and this is where we should end up being attracted into. Now, if we go down to the daily time frame, what we can identify from a daily perspective is last week the market was consolidating in this symmetrical triangle formation. Now, on Friday, the market broke out of this symmetrical triangle with NFP being the catalyst. So we broke out of this symmetrical triangle, we've taken out the range highs, and we've pushed up into this level of supply. So because the market has taken out this descending trend line resistance, now the liquidity is below this ascending trend line support. We can also see that the market, as I said, has taken out the previous week high. Now we should start to target the previous week low. So the question is, where do we want to be looking for a short from? If we go to the 3-day time frame, straight away I can see this beautiful level of supply exactly here. The 50% of this level of supply lines up perfectly with the psychological level of 1.2500. If we now go back to the weekly time frame, or even the daily time frame, we can see that we have a bearish impulsive move from point A to point B. This bearish impulsive move broke this level of structure right here. If we take our fib from the high to the low of the bearish impulsive move, we can see that the 0.618, the golden ratio, lines up perfectly with this level of supply, which also lines up with the psychological level of 1.2500. So what I'm looking for here, there is buy side liquidity residing above this high right here, which is the high that the market is currently testing. So what I'm going to be waiting for, if we also go back to the weekly time frame very quickly, you can see there is a fair value gap from that wick low to that wick high that we are just spiking into as we speak. So now we are layering confluence upon confluence for a area where the market can react. Right, we have a fair value gap, we have the 0.618, we have a level of supply. What we also have on the monthly time frame is that breaker candle right there. So just on this level that I'm showing you right now, we have 3 or 4 confluences to tell us that the market can react from this zone. Okay, once this high gets taken out exactly here, I'm going to be monitoring all inside of this area for potential short opportunities. Now, when the market was here on the London Open, because of all the reasons that I just explained to you regarding this level of supply above us, I had a bullish bias because I expected the market to get attracted into this zone. So quickly, how did I look for this potential trade this morning? It's very simple. We have this Asia session range. During the Asia session range, the market swept this low, followed by a bullish market structure shift. We came down, we tested this demand zone, and we made a bullish break of structure. Okay, so from point A to point B, this was a bullish break of structure. If we go to the hourly time frame, or the 30-minute time frame, we can see that we had a fair value gap from this wick high to this body open. This fair value gap was just above this 30-minute bullish order block. Okay, when there is a fair value gap above a bullish order block, this creates a stronger order block, okay, and vice versa. If there is a fair value gap below a supply order block, this makes this bearish order block stronger, right? So the market made the bullish break of structure. I entered on the 1-minute time frame as soon as price manipulated into this order block. I entered and we had pretty much zero drawdown on this position, and the market has now pretty much reached my upside target, which was that fair value gap. Okay, so I'm fully exiting this trade now as we speak, and as you can see, the market is getting attracted into that fair value gap that we've already spoken about, and it has just rejected one of my 4-hourly zones. Okay, so as I said, going back to the lower time frames, let's just get that back on my chart actually. Let's have a look at that. Going back to the higher time frames, just to recap, okay, although the intraday right now is bullish, okay, I am expecting a reversal potentially towards the middle of the week from this level of supply that we have all inside of this area right here. Hope you enjoyed the video, guys, and I hope you can capitalize from my update. I'll speak to you all soon. Take care.